Hello, and thanks for watching this Cloud9 ERP Solutions video and subscribing to our YouTube channel. In this video, we're going to talk about General Ledger Allocations. It's a feature that's in Acumatica. It's under Finance, and the setup of it is under Profiles Allocations. And what it allows you to do is it allows you to distribute funds from certain GL accounts to others. And you can do this in an automated process. So one example might be you have rent and corporate is paying for it, and you want to distribute it to all the other branches. So you can see in this example, we're taking a range. This is the range period, start period to end period. That gives you the ending date that you want to do it for. It's a recurring, so it's going to continue to recur. We can schedule it. We're going to allocate the funds available from these accounts from the accounts period to date. So then that's what we're doing here. We're going to run this monthly based on the rental that's posted for that period. We're going to take those funds, and then we're going to distribute them by percentage. And there's a few options here, but let's start with this one, and then we'll work our way out. We're going to use our actual ledgers. These are our live accounting ledgers, whereas we could use different types of ledgers in Acumatica, another topic, but you have the ability to have different ledgers, statistical ledgers, reporting ledgers, and other ledgers that you can basically report on. And you can see Acumatica has a few in its demo site. And so if we go into source account, this is the account we're monitoring. So we're taking a look at the rent or lease expense account. And you can define the different sub-accounts. You can break this out and have multiple accounts to take funds and reallocate them from. You can limit the amount that you want to pull out of that account, or you can do a percentage limit. So, for example, maybe it's $10,000, but you only want to take $8,000 because you know that $2,000 should go to wherever it was posted. You can do that, or you can simply redistribute that $2,000 over here in the destination, which we're going to go to right now. And then here are all the branches, the same GL accounts, but all of the different branches that we want to use, same sub-account, and the percentages that we want to use. So these percentages would add up to 100%, of course. So we're going to redistribute this. We're pulling from the product wholesale. We're going to redistribute 70% of it back. That's the example I mentioned, where we really don't need to limit, but we could if it made more sense to you. But we're going to redistribute the funds from the rental account, 70% to this branch, 15% to Services East, 5% to Product Retail, and 10% to Services West. Now, in a different example, instead of using a percentage, you could use a weight. So right here under distribution method, we're using percentage now, but you can use weight. And the simple difference between that is, instead of putting percentages here, I could just put numbers. Acumatica will add up all the numbers and determine the percentages for you. But it's a lot easier if you're using these coefficients rather than a percentage in some cases. So you have an option there. And I'll show an example of that in a moment. So let's take a look at this. This was built into our demo site. It was already created by someone a long time ago. Let's look at our allocation history. So when we look at these allocation profiles that we've configured, we can also look at the history of every single time we ran this allocation and what it did. And you could see the control totals. They've changed over time, which makes sense because your rental amount may change. And through the course of this allocation, we've been running it for many years. We can see here that the control total has changed. So if we just go back and take a look at this GL batch that was run, we'll maximize it. Now, setting aside the fact that we have automatic balancing entries, do tos and do froms in this particular company, when you add this up, what you see here is we pulled out 34,170 of the rental amount from product wholesale, and then we redistributed it across all of these other different branches. So that's how that works. Now, if we take another example, we'll go back, and we look at this one by weight. So in this situation, we're just picking one period. We're also using the account period to date. We're distributing by weight this time. So if we take a look at what that means, we go to source account. We're picking up our insurance account and just the 00 subaccount. And if you don't have subaccounts turned on, you won't see this. If we go to destination account, we're distributing this across different branches, and we're using a 5-to-1 ratio. And just doing a little bit of the math for you so you could see how it distributes. These are coefficients, so we used 5-to-1. When you add them up and you divide by to get the percentage, we're really putting 63, 25, and 13% in there. So if we go back, you could see it. In some cases, it's easier to just put a weight. Maybe you have these numbers from something else, from other source that you're using. Maybe you're importing this. But if we take a look at our allocation history and we open it up, you can see in this example, we credited $2,200 out of our insurance expense account, and then we redistributed $1,375. That's the 63%. And then $550, that's the 25%, or the 2-factor. And 13%, that's the 1-factor that we put in there. So we automatically made these entries. And again, this could save you a lot of time making these manual journal entries to get the financials correct for reporting. Now, if we take a look at this profile that we did, again, there was only one transaction I did. I just showed it to you. The distribution method, we talked about percent and weight. You can also use the distribution method of the destination account. So what does that mean? Well, the system can look at all your destination accounts, and it could look at the either period to date or the year to date, sum them all up, figure out what their percentages are, and use those as a percentage to distribute to. So if I change, for example, to destination account period to date, so what you notice here is we get another ledger option. It just enabled because we changed destination account period to date for our distribution method. So let's go through these. The allocation ledger is where we're going to create the transactions. The source ledger is where we're getting the funds from. But the base ledger, you can change it so that you can use a different type of ledger to distribute up or determine the percentages and the weighting that you want to allocate to. So Acumatica gives you an option for that ledger to actually change it. So we're just going to keep it all as actual here. And once again, if we use our source account, this happens to be the insurance account. But for our destination accounts, as we distribute this, if there's any period to date, we selected period to date in this destination ledger, then Acumatica could use those percentages accordingly. Notice there's no weight or percentage column anymore because that's being determined based on our base ledger. But what you do have is the ability to change up your branches, your GL accounts, and your sub-accounts, again, for the distribution. The Acumatica assumes that even though we're picking the same ledger, that it is possible, we could leave this blank and it'll just use this account and branch and sub-account, but it is possible for us to use different accounts in order to calculate our distribution. So a lot of this is above and beyond what you might expect and what you might do. And quite frankly, you may actually do all this in an Excel spreadsheet and simply import the journal transactions. But Acumatica does have very sophisticated functionality here that you could leave it in Acumatica and automatically schedule it each month. And if we go back, the only difference between these two is instead of looking at the actual period, we could look at the year-to-date amount to determine how we want to, again, calculate those distributions, essentially the percentage distributions that we're going to do. And I took the liberty of bringing up the help just so you can see it. The previous GL allocation is the amount allocated since the last allocation is collected from the source accounts. So again, you can play with this on your test company and determine, how this all works. I think if you're doing GL allocations maybe a few times or you're skipping periods, then this will pick up the difference between those accounts. And instead of using the actual period, it'll pick up the difference and then you'll be able to catch up. Now, you could just run these allocations and it'll also catch up period by period, but you may not want to. You may want to make lump sum entries based on the differences between the last time the allocations were run. So again, this is more of an advanced option that you may or may not use, but nonetheless, it is in there and you can play with this and workshop it through. So that's allocations. We showed how we can allocate using by weight. So in this example, we used our account period to date. We kept our allocation and source ledgers the same. Allocation is where we're going to be creating the entries. Source ledgers where we're pulling from. And base ledger is just if we decide to use some sort of destination formula for figuring out our weights, then we can use a different base ledger. But our journal transaction looks like this for insurance. We pulled it out of this account. We distributed it across this account, a 521 or 63, 25, 13%. And then we looked at the percentage. And again, you can see the destination account is showing this, but we also looked at an existing allocation for rental expense to branches where we're using percentages instead. And our source account is a single account, but we're distributing across different branches with these different weights. And you saw the journal transaction here. The only wrinkle in that one was we had automatic balancing entries due to our inter-branch consolidations, which is great functionality if you have to manually use do tos and do froms, but we have another video for that. So hopefully you found this video useful on finance general ledger allocations. And if you did, please click the like button. And if you have any questions about this or anything else Acumatica, feel free to reach out to us. We'd love to help you. Thanks again and have a great day.